Welcome to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank that brings you market views and insights on the go.
Welcome to Cut to the Chase. This is Daniel Lam, your host for the podcast. The markets have been extremely sensitive to macro data this year. US CPI is arguably the most market-moving one, especially when all but one of the US CPI prints year-to-date were 2 to 3 standard deviations away from expectations, plus or minus. The newest set of CPI data will be out tonight in East Asian time. The headline Consumer Price Index for September is expected to slow to 8.1% from 8.3% in August. The core component of the report, which strips out the volatile food and energy categories, would be even more heavily watched. We did mention earlier this week that used car prices and airfare travel could surprise on the upside, not to mention the ongoing strength in shelter cost. How should you be positioned ahead of the US CPI? Well, over these few weeks, we've been discussing how to increase the defensiveness in your portfolio, such as rotating into high dividend equities, raising more cash, and also adding to energy sector, which acts as an inflation hedge. The other idea that is worth mentioning is gold. It is true that due to the surge in real yields, gold is down year to date, but gold has, at various points in the year, proven to be a strong inflation hedge, especially on CPI days. So for example, prior to last month, gold was up 10 bips to 120 bips on days of CPI release this year when the CPI beat expectations. And it was up 10 bips and 140 bips on the 2 occasions when CPI missed. And how is gold looking beyond the CPI release date? Well, in terms of positioning, gold is currently at minus 1.5 standard deviation from the average level of investors' positioning. Starting from this level of under-owned positioning, investors may get an edge of positive 8% in 3-month forward return versus if they were to start from an average level of positioning. Technically, gold is currently at minor support around $1,670, with key support at $1,620. If it breaks above resistance level at 1720, then it may have more upside ahead to the 1800 level. Now, I will be on leave for the following 2 weeks. I will be participating in the World Amateurs Chess Championship. But this daily Cut to the Chase podcast will not be interrupted. Other colleagues in the CIO team, most likely Steve Bryce, our Chief Investment Officer, will be covering for the following 2 weeks. As always, if you enjoy this podcast, please don't forget to rate and like it. Thanks for listening, and we wish you a happy day ahead.
Thank you for listening to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank. For more details on the latest market insights, subscribe to Standard Chartered Money Insights.